think, act, and prosper. You are now tuned into the Money Level Show.
Hey, everybody. Welcome back to the Money Level Show, where we think, act, and prosper. We got my guy, Justin Huhn, back on the channel. He's been on here a few times. Welcome back. It's been a while.
Good to see you, Daryl. Thanks for having me on again.
Yes. Since we've been on, I haven't been hearing much talk about uranium. I don't know if you heard it. You know, obviously you're more close to the ground with it, but there was a lot of FOMO. There was a lot of hype around it, you know, thinking about 2020, 2021, early 2022. Since then, the Fed has been raising rates. People have been shaking out of markets. Where are the uranium speculators right now? Like, have a lot of them been shaken out or what?
Oh yeah, absolutely. It's been a painful trade over the last, let's say, 6 or 8 months, especially. We've had a couple of counter trend rallies, but it's been a pretty long period of consolidation following what was a pretty robust initial run up off the bottom. So we actually had the commodity bottomed in 2016. Most of the stocks bottomed at some point between that and 2018, 2019, with some exception. We had a handful of them also bottom in the March 2020 crash, I guess you could call it. And since then, we had a decent recovery following the COVID crash. And then the market really took off December 2020. And for about a year, we saw most stocks in the space go up multiples, doubles and triples, and some even more than that in about a year's time. And some of them even within a couple of months of that initial run. We had another little rally last April, a small rally in September based on some news out of Japan. But generally speaking, the equities have been underperforming the commodity itself, largely influenced by just general capital markets and the broad market. Even though now we've had sort of a lower volume melt up in the broad market over the last month and a half or so, uranium equities are not watching that movie. I think a lot of it has to do with just the size of the sector. It's so small, and the fact that it's so small and illiquid doesn't take a lot of selling. In fact, it's just like selling on the margin that tends to move it down on lower volume. And if we go back, you know, a month and a half with the banking crisis, we definitely saw some funds that quote unquote blew up due to their exposure to the banks that also owned uranium equities. And so a lot of times that type of selling that's forced, let's say by margin calls or whatever it might be, if that hits the market and retail is believing in this wonderful story about the growth of nuclear and uranium going higher, yet the screen is telling a different story, that basically becomes the story. So that's been essentially what's been going on over the last number of months. And the equity valuations are now basically back when compared to the metal itself. They're back to levels prior to that first initial launch in December 2020. So we've almost, even though the equities, most of them are still up from that on a relative basis compared to the cost of uranium, we've totally round tripped. So it's kind of gotten back. You know, I keep thinking of this kind of headline. I'm actually working on a longer form essay that I want to put out there called "So You Want to Be a Contrarian?" And most people are not contrarians. Most people in the markets are momentum, and you know, they're chasing momentum, they're chasing trends, and there's nothing wrong with that. I've been a technical trader. I still do that a little bit to some extent, but most people are followers of trends. And when the trend moves against you and it's trending down, and most of the stocks in the space are generally bearish, you know, trading below declining 200-day moving averages as a simple definition for that, it becomes again a contrarian bet. It's a bet on, and it's not even that hard of a contrarian bet really, because it's very, very difficult to poke a bearish hole into the thesis right now. It really, really is moving in a fantastic direction. The commodity is going higher. I can basically bet my life on it. But the equities they're not paying attention to that yet. So a contrarian bet here, a speculative bet here is, okay, these things are cheap. The story looks great. Do I believe it'll eventually, the equities will eventually follow the fundamentals of the sector? I personally do, but that's the speculative bet. That's the contrarian bet, is will the equities wake up again and follow that fundamental story? So that's kind of where we're at. So the speculators have largely been washed out. And I tend to think that once we start to move up, there will be quite a lot of FOMO volume coming in from people that got shaken out, because a lot of the people who got shaken out do believe in the story. They do believe in the fundamental thesis. They think that nuclear is trending towards further support and more of a percentage of the global grid, let's say, as we go into the future, will continue to grow. Uranium is going higher, et cetera, et cetera. So the people that believe that, but lost faith in the equities moving on that news, are likely going to come back once we see a confirming bottom and a move back up.
Hey everyone, sorry to interrupt this interview, but I want to let you know about this important resource, the Rule Symposium. The link is in my bio. Be sure to click that link and check out the site for the Rule Symposium. This is a symposium that Rick Rule puts on every year. From this year, it's going to be from July 23rd through the 27th, and you're going to be able to hear from some of the best in the space. You're going to be able to shake hands with some of the best in the space. He's going to have guests and presenters such as Jim Rickards, Nomi Prinz, Rick Rule himself, and many others. And these are going to be people that have built billion-dollar businesses, people that have made a lot of money in investing in the natural resource space. So be sure to click the link in the bio so that you can check out the Rule Symposium. That is the Rule Symposium. Check it out. And I appreciate you all for clicking that link and supporting the channel in that way.
Mhm. Yeah, it's been kind of interesting because like even like from me myself, like when you first get that information, it's a longer term story, and obviously we have some fast run-ups and then some pullbacks. And within that whole dynamic, for me, like I've taken profits when I see a big pull up, when it goes up quite a bit. But then, before it pulls back, I try to, make sure I take some profits or whatnot. But for me, I'm like a longer term investor. Like I believe in the story for the long term, but I'm trying to frame in my mind, how long is this going to take, or do I just ride the waves, or do I take profits and wait for pullbacks? And so when I've watched like Rick Rule talk about, him having his price points of where the stock should be, and when they do, outperform that price point, he does sell and reaccumulate when it comes back. And so, what's kind of your strategy in this market? Like, are you taking profits? Right now we have recession coming. That's what a lot of people are saying. That's what data is showing. Like, what's kind of your take and your strategy right now?
Well, my strategy for the short term is to keep some cash on hand in case we get another flush down. But to quote like you just mentioned, Rick Rule, who's a mutual friend, sometimes the stocks are cheap enough. And so even if they could go lower, they tend to be cheap enough. And I think that right now, most uranium equities are cheap enough. So I have added to positions, especially about 3 or 4 weeks ago, when we saw, for example, the relative strength index on the daily charts just basically falling off the screen. That for me was a screaming kind of buy moment. It doesn't necessarily mean we won't see some further downside in the short term, but I'm with you. I'm a long-term investor in the space. My trading, let's say, of the equities that I'm holding is largely dictated by the fundamentals rather than the technicals. So for me, I haven't really hit a moment of profit taking. Basically just continued to build positions over time and add on weakness for a long-term hold. There's a couple of reasons for that. One, I would say, is that I'm in the United States and I'm in a high tax state within the United States, California. And if I'm selling, I'm creating a tax event. And I also would, if I believe in the story, still, I think this is going to last for many years going out into the future. Unless I need to protect that capital or actually pull some profits out of my investment account, I don't see any reason why I would want to sell, take some profits there, create a tax event, pay taxes on those profits, and then hope to re-enter that same position if it's a high conviction position at a level that's low enough that can justify that tax event that I created. So a lot of it has to do with goals, has to do with where you're at in the world. Many jurisdictions internationally do not have either capital gains taxes, short or long term. And so for me, creating a short-term or even a long-term capital gains tax event, and then knowing that I want to get back into that position, hopefully lower, that's just not something that's a low stress thing for me. So for me, if I'm looking at the fundamentals and I believe that this is going to be a run that's going to last for multiple more years going out into the future, I tend to just buy and hold and add on weakness. There will be a point where I think when we get to a significantly higher uranium price, and the equities look overbought technically, that'll be a point to kind of take some chips off the table. But a lot of, the trade exit is going to have to do with the fundamental case for the sector and whether or not we believe that uranium and or the equities are going to continue to move higher. We don't expect that exit to be for a number of years, but there's going to be moments in time in the next couple of years, of course, to take some risk off the table, pay ourselves a little bit. That's going to come. But for us to do that before the contracting cycle for nuclear utilities have even started, and knowing the uranium price needs to, probably double here in order to hit that incentive pricing for new projects to come online, we don't really see any purpose of taking profits other than the need to protect capital. And that's something that everybody's got to do on their own individual basis. So that's kind of where we're at. We're long-term investors in this space. We have very high conviction for the growth of the sector and uranium going higher.
Yeah, and I can see I keep looking at the charts going back to 2020 when the pandemic came, and these energy stocks were so cheap. And sometimes, I'm thinking man, I wish I would have got in around that time. Some of these companies, solid companies were pennies on the dollar. And so I can see if someone definitely accumulated a lot during that time, how you don't have much of a conviction to sell or take profits because you got it so cheap as well. So I could definitely see that. So I did want to talk about the risk of recession and what does the uranium market look like when there's a recession. Normally, my bad, y'all, my words are just getting all mixed up today. Normally a recession causes an industrial, and productivity to slow down. So what's kind of your base case if we have a recession later this year?
Well, uranium is kind of unique. It's a unique commodity in that it sort of is in a world of its own. Demand for uranium coming from existing nuclear power plants is pretty static. It's pretty easy to model out into the future. And, nuclear power plants can cycle down a little bit in their electricity production, but the core load is already in the core. So it doesn't necessarily mean a reduced demand for uranium based on cycling down the electricity production 5 or 10%. So historically speaking, recessions haven't really affected demand. Of course, recessions affect capital flows and things like that. So that can affect, I suppose it can have an equal effect on the equities markets as well as production and development of mines. So these companies that are in development to be producing in the next few years, let's say, so that's Global Atomic and Paladin and Boss Energy and Encore Energy, Denison Mines, all of these companies, they've got to raise capital in one way or another. So whether that's through an ATM at depressed equities prices, that hurts. Whether it's private placements where when the equities are in the tank and they're having to raise at a discount to their already low share price and give away a half or sometimes even a full warrant, that hurts the shareholders. But also, just generally debt financing for larger projects is much, much more costly. And so these sort of things, ramping up the costs for the companies that are going into production actually puts pressure on a rising uranium price. So I don't expect recession to actually affect the price of uranium, especially in the short term. Now, if we had run up already to $100 plus uranium and there's a looming recession and there's a number of funds that if their shareholders pull out, they're going to be selling pounds into the market, then I would be like, I would be a little bit more concerned about the pricing of uranium. That's not the environment we're in right now. We're actually in an environment where funds are adding to exposure to the physical commodity, despite the fact that pretty much everyone is expecting a recession going forward. So I think really the biggest effects it could have are probably just on the equities markets. And again, the capital markets being as they are and potentially more difficult. Now, lower rates could be helpful. If rates come down, even within a recession, some of these developing companies can debt finance for a little bit less cost. But either way, things are not getting easier right now in terms of capital markets for these developing companies. So that actually has an upwards price pressure on the commodity. If the cost of capital continues to increase, then the cost that you're going to have to sell the thing that you're producing is going to have to increase by its own nature in order to fund that development. So it's kind of a perverted way to look at it, but it is kind of the reality. Of course, risk off capital markets, the main thing they're affecting in terms of the commodity itself has to do with the physical funds. So if Sprott, for example, continues to trade at a discount to its net asset value because of risk-off equity environments, they're not going to raise any money and they're not going to buy in uranium. So there's less of a push up. But of course, we've got none of the physical funds in there buying uranium right now. And we've seen about a $3 move in the last week for spot uranium. The timing couldn't be worse as we're seeing the S&P down like 50 handles today. So bad timing on that front, but the equities are trying to get up off of the floor here with the spot price moving. So very hard to determine in the short term, but long answer short, recessions, unless they're very deep and very prolonged, like full on depression, is unlikely to affect actual demand coming from nuclear power plants.
Yeah, for sure. That's good to hear. So transitioning, I was thinking about uranium, nuclear energy misinformation. I recently did a video addressing some of the misinformation regarding nuclear waste, also the amount of deaths that come from nuclear accidents, carbon emissions. What are some of the biggest misconceptions or misinformation that you hear about uranium, nuclear energy, and how do you communicate that to your audience?
I would say by far the largest misconception around nuclear energy has to do with concerns about the waste, and it's not even close. The following, I would say, the runner up to that concern would be safety around nuclear plants, which is also just the general. I wouldn't even say it's consensus at this point, because it's the understanding of how safe nuclear really is, that is growing quite quickly right now. We've got majority support in most of the major nuclear countries, in France, in the United States, in Japan, even majority support in Germany that just shut down their last 3 reactors a couple of weeks ago. But as far as the waste goes, there's never been an accident with nuclear waste. It's the only waste product from energy generation that is highly, highly regulated. So, for example, the waste from coal, burning coal to produce electricity, literally goes into the air. It goes into your lungs, it goes into the ocean, it goes into the atmosphere. The waste from nuclear is highly regulated. So spent fuel rods, they spend a couple of years in cooling pools where a lot of the radioactivity and heat dissipates within a cooling pool. Then it goes into a long-term storage cask, which is solid concrete and steel. And these things, you could fly a jumbo jet into the side of these things and they remain intact. Very, very secure, very safe. And like I said, there's never been an accident or a death of any kind from any sort of radioactivity coming from waste. Lastly, on the waste front, there's far less waste than most people think. So one of the things that I always mention, because I think it puts it in perspective, is that the United States has had nuclear energy technically since the 50s, but there was a big revolution in the 70s and 80s where a lot of plants were built. But we've had a pretty robust nuclear fleet for many, many decades. It's 20% of the grid in the United States. All of the nuclear waste from energy generation in the United States from the 50s until now, all of it fits on a single football field 30 feet high. So that's how much waste is being produced by 90 something reactors, cumulative for the past 70 years. So it's not a lot of waste that's produced, and it's highly regulated and totally safe. You can stand, right next to a cask that's holding radioactive waste. And then from there, it remains mildly radioactive for a very, very long time. But the actual dangerous levels of radioactivity tend to dissipate over a couple of decades within that storage cask. So very, very low risk coming from waste, and it doesn't produce a lot. And then the second is just the safety record of nuclear. It's actually the safest form of energy that's ever been implemented or conceived. When you measure, let's say, kilowatt hour of energy production versus human deaths. The only nuclear accident that's ever resulted in a human death was Chernobyl, which killed 50 something people. There were no deaths from 3 Mile Island. There were no deaths from Fukushima. And most people don't know this, but the other 2 reactors at Chernobyl continued to operate for something like 14 years after that accident. And so it's an incredibly safe technology. And historical stats absolutely support that. It's safer than wind. It's safer than solar when you measure actual deaths coming from the energy generation. So it's safer than most people understand. There's less waste than most people think is produced. And as far as carbon emissions go, of course, there's embedded carbon emissions within the construction of nuclear power plants and the mining of the commodity and the processing of the commodity that utilizes energy. But the actual production of electricity from a nuclear power plant is absolutely zero carbon. It's just the radioactivity of the fuel rods boils water, produces steam, and turns the turbine. It's a very, very complicated way to boil water, essentially, is what a nuclear power plant is. Just like most other forms of generation is turning a turbine of some kind. So yeah, it's very safe, not a lot of waste, and it's very, very low carbon, even if you include the embodied carbon emissions from concrete, steel, transportation, and the production and the processing of the commodity. It's basically the lowest carbon production per kilowatt hour.
Yeah, you just made me more bullish hearing that.
Yeah, it's a feel good investment. It really is. I mean, even if you're not looking at the carbon aspect of it or the global warming concern aspect of it, it's the most efficient form of energy as well. So if you're thinking about just the growth of human prosperity, it's important that we move towards energy production that it has a high energy return on investment, which nuclear is the highest, and it's not even close. Going into solar and wind, especially when they're buffered with battery storage or storage of some kind, that's actually moving in reverse in terms of the energy production based on what's invested to produce that energy. So nuclear ticks a lot of boxes.
Mm-hmm. Yeah, and especially with baseload power, solar and wind can't really serve as baseload power in a lot of areas. Where they have a lot of blackouts and brownouts and such. And so it's good to have a solid baseload power that's clean and efficient.
100%. Yeah. Most grids can handle a minority percentage of renewables, but inherent to renewables is you either have to have storage because the sun isn't always shining and the wind's not always blowing. You either have to have storage or you have to have a baseload energy source that can very quickly and easily cycle up and down to offset the intermittency of wind and solar, and that is coal or natural gas that can do that. So most people don't understand, but when you shut down a nuclear power plant and expand renewables, you have to expand fossil fuels as well, because there just isn't grid scale storage coming from batteries that's efficient. That's not even getting into the mining of cobalt and manganese and lithium and all of these things that has to drastically expand, and the embedded or I should say embodied energy in the production of these batteries. It's really not a green environmentalist supported activity, in my opinion. Producing a massive amount of grid scale batteries is not in any way green. So a small amount of renewables, I think, has its place within a grid, but clean baseload really is the solution, in my opinion.
All right, yeah, thanks for sharing that, Justin. I was kind of wondering, as we wrap up today, just about where's supply and demand currently with nuclear. Obviously, Germany shut down their last their last 3 plants. I don't know what they're thinking over there or what. And
They're not.
exactly. So what's going on with the supply and demand currently in the nuclear space, uranium?
So currently, the World Nuclear Association that puts out a fuel report every 2 years, and the next one will be this September. They set out a lower, a reference, and an upper case for supply and demand and modeling out into the future. And there's multiple industry players, very intelligent people that know the ins and outs of this sector, like the back of their hand, that come together and form committees from the demand side and the supply side. And they make projections going out into the future based on a number of different factors that may or may not come to fruition for the time period they're projecting, right? So that would be an expectation of life extensions and shutdowns, where we could see SMRs be developed and how quickly and how many and what the demand could look like on that front. Then, of course, they have to project based on supply. When will mines start to deplete with their supply? When will we see new supply come online? And then that gets graphed out, right? So you see these big alligator jaws basically on this graph of supply and demand. And we believe that the reference scenario that's going to be put out in the next couple of months in September by the WNA is going to look more closely like the upper scenario from 2 years ago because of the developments of the last 2 years. So not only does this take into account SMRs, but some of the demand, actually, the demand is always understated with these models because WNA is not going to project into their demand scenario builds that haven't been officially announced yet, right? So if you go to any of these WNA pages for any given country, it'll show you operating, under construction, planned, and then proposed. So none of the proposed is included in the demand picture, the planned and the under construction, right? So really what the WNA is looking at right now is a 4 to 6% annual growth in nuclear going out to 2040. 4 to 6% per year. Now, if we go back in time 3 or 4 years, that projection was 1 to 2%. That's how much this has changed. And 4 to 6% per year is a lot. We have the Chinese right now saying shooting for 200 gigawatts by 2035, which would be 10 reactors per year. They're not building to that capacity yet, but they've reiterated we need to see 8 to 10 reactor starts, construction starts every single year. Right now, they've been on pace for about 5 or 6 per year. It's still a lot, but those are their goals, right? So the demand picture is, it's interesting because you can take the existing fleet and it's relatively easy to model out the demand for the next 3 to 5 years. Then you get past that and you have to speculate on construction starts coming to fruition. You have to speculate on SMRs. But either way, 4 to 6% per year going out into the future. Great. Okay. What about supply? Supply is constrained for multiple reasons. We already mentioned capital markets constraining development projects. One great example of that would be Paladin's estimated restart of Langer Heinrich. This was November of 2021. They estimated it would be 87 million to restart. Within 6 months, they had to update that estimate to 118 million. It was about a 40% increase in cost over 6 months, simply from inflation, issues with finding labor, et cetera. So we have big mines. McArthur River just came back online over the last 6 months or so. That's going to be producing for the next decade. Cigar Lake starts to diminish in production going out about 5 years from now. In fact, unless they get into the next phases of that mine, which are lower grades and higher costs of production, that is set to be basically diminished to the point of shutting down by 2028, 2029. Kazatomprom's production should peak around 2030 unless they discover, new deposits and continue to expand in Kazakhstan. So long story short, the big producers of today are largely dwindling in their capacity produced by the time we get into the early 2030s. So we need a major expansion in new mining supply over the next 5, 6, 7 years, major expansion. And as of now, we've got Langer Heinrich in the next couple of years. Boss's Honeymoon going to give 1 or 2 million pounds, maybe. Encore Energy, the same in the United States. Global Atomic in Niger should be 2025 production, but that's if everything goes perfect. So supply, I'm actually getting to the point where by the end of the decade, we could have a serious problem in that we might not have uranium above ground to be able to feed through the fuel cycle and actually get into reactors. That's how constrained supply is. So I think we're going to see a huge run in the price of uranium. That doesn't mean it happens tomorrow, but over the course of this contracting cycle, that's where it's going to be. We're just starting the contracting cycle. So this year we've contracted 57 million pounds year to date. We're almost towards the end of April. So if you annualize that, that's right about run rate capacity, around 180 million pounds of demand, which is where we're at structurally for this year. Around 180 million. That's just the reactors. That's not any sort of secondary demand coming from producers buying or coming from financials buying, right? That's just the reactors. So if you add producers buying, financials buying, we're probably in the realm of 200 million pounds of demand realistically for this year. Supply, we're probably going to be right around 150 million in primary production. Secondary supply coming from underfeeding, primarily coming from the east because the west is not underfeeding. That maybe we'll get another 10 to 15 million pounds. So we're probably 160, 165 million in supply, primary and secondary, and about 200 million in demand, primary and secondary. So we've got about a 30 to 35 million pound shortfall this year alone. Okay. And that only gets worse. It only gets worse going out into the future. So I don't see how we don't see way higher prices. I just don't see where that supply could come from. There's not a lot of mobile inventory above ground right now. There just isn't. And it's not going to take a lot of buying pressure to really put the heat under the price here. So supply and demand is looking, from an investing perspective, it looks fantastic. From a perspective of will utilities have fuel for their reactors in 2031, that's where it starts to get a little bit sketchy. We definitely need higher prices. Every time I hear about, the Uzbeks are going to be expanding, they're going to double their capacity by 2030, get an extra 8 or 9 million pounds into the market. Great. Let more. We need more of that. That's where I'm at now. When I hear about new deposits being discovered, new mines that are set to come online, expansion, it's like, good. We need that. We absolutely need that. I know how long it takes and how costly it is to develop mines. So I don't see how this thing doesn't go way higher.
Yeah. Man, you have so much knowledge. I learn something every time. I hope you all are learning some valuable information as Justin has blessed us with his time. I'm actually probably going to go buy some more shares of some companies now that we've had this interview. So Justin, where can people find more about you and the services you offer?
Our website, uraniuminsider.com. I'm also on Twitter at uraniuminsider.
All right. Awesome. Thank you so much, man. You take care.
My pleasure, Daryl. Good to see you.